The year is ending and the cryptosphere is evolving, or has evolved anyway. 2019 started in a pit of despair and uncertainty, blossomed into an age of recovery, and then fell into what seems to be a rather well trained path towards maturity, or at least as well trained as crypto can get. In any case, the dramatic arc of the year has pushed certain trends into the background while other sectors of the crypto industry have found their way to the forefront. One of these latter factions is DeFi, or decentralized finance. In some ways, it seems that DeFi is the latest blockchain related buzzword to have debuted on the crypto scene. Its meaning usually bears a sort of halfway clarity that companies trying to prove their stuff bet on and that better established firms assume is understood by all. However, underneath all of the buzz around DeFi lies meaningful progress. Recently, finance magnates sat down with Brian Kerr, CEO and co-founder of DeFi platform Kava Labs. Kava is a blockchain solution providing DeFi services such as stablecoins, bonds, and lending to crypto users across many blockchain networks. Brian spoke with us about the true meaning of DeFi, the future of the sector, and how his company is expanding financial services. So, Brian, can you just start by telling us a little bit about yourself and the work that you do and how you got involved with Kava in the first place?
Yeah, absolutely. So my name is Brian Kerr. I'm the CEO of Kava Labs. Kava is building a cross-chain DeFi platform which offers lending and stablecoins to users of the major cryptocurrencies like BTC, XRP, Atom, and BNB. Mm-hmm. I got into this industry actually coming from gaming. I previously had a venture-backed company called Fnatic, which was a leading esports and gaming company in Europe. And It was actually only after that company had grown to considerable size that a number of other of my colleagues who sort of were leaders of partner companies of ours in that industry, they started all kind of falling like dominoes from esports and gaming and jumping into something called blockchain. And I was like, what's going on here? Why is everyone paying attention to this thing? Like, what's so exciting? And I actually was very lucky to be offered a role as an advisor to an early Ethereum project called DMarket. And DMarket was a kind of like the first instantiation of a decentralized marketplace for video game items. So back then they didn't have the term, but it was NFTs, right? So NFTs of video games and creating an open marketplace where people could trade them. But I watched my colleagues or my friends through this company, DMarket, just completely, they did something that even being in Silicon Valley I didn't see, which was that they had a presentation, they didn't have anything built yet, and they made like a website and put their idea out there. And then within 3 weeks, they had $20 million and they were off to the races. And here I am, the chump who has a company with real revenue, millions of dollars of revenue, but still like I can't raise that type of money. And even if I did, it would take me 6 months, not 3 weeks. Right. So it was just like, it really made me turn my head and say, okay, something is going on here. There's a lot of activity going on here. Is venture going to be disrupted? Is, this technology does have other implications? And that really just made me do a full dive from what I was doing. And thankfully at that time, Fnatic, the company that I was part of, had already grown to a good size. We brought in another CEO to take over a lot of the roles. And I had already laid all the foundation I wanted to lay. So it was a good breaking point for me to focus on other things. And I spent the next 6 months or so really just traveling the world, going to conferences and learning as much as I can about the space. And one of the things that if I had any superpower, it's that I'm not afraid or sort of unabashed about just reaching out to the coolest or the sort of like the celebrities or whoever's like the most knowledgeable or whoever I want to speak to that I think has my answer that I'm looking for. I find a way to get into contact with them. So within my first 2 weeks in being crypto, I sat down with like Joseph Lubin of Consensus. I sat down with some of the founders of Ripple. I talked to a bunch of major banks about how they were thinking about blockchain technology. It helped me get my bearings very quickly. And the main issue that I identified was that interoperability, or how these systems talk to each other, was actually going to be sort of core to sort of the speed at which blockchain could be adopted across the world and its impact. So after that, I found some good co-founders that I thought could bring different aspects to the table of what I felt we need to do. And we formed Kava Labs shortly after that.
Okay, gotcha. So Kava describes itself as like a DeFi platform or cryptocurrency network. So before we get a little bit further into the nuts and bolts of what Kava does, can you talk a little bit more generally about DeFi? It's a term, it's a trend in the blockchain industry that's come quite far this year, but it's not clear necessarily to everybody exactly what that means. So can you just break that down?
Yeah, that's a great question. And truthfully, DeFi means something different to different people. Last year, DeFi was all about decentralized exchanges. Exchanges are centralized, and therefore, if you create a DEX or decentralized exchange, that's DeFi. Blockchain was decentralizing payments or value transfer. And I think in DeFi in the context of this year, what people really mean, it tends to be lending. So the ability to create some type of financial service that a bank offers. So far, blockchain is taking care of sort of the custody and payments. And now what else does a bank offer? Well, it's lending. And that's where all the quote unquote DeFi projects, or the projects tracked on DeFi Pulse and the other websites, they pay most attention to these categories of projects that are either doing lending. And then the other category that's also emerging is like derivatives or synthetic assets. So all the different financial products you'd have in a traditional market that don't currently exist for crypto because it's so nascent. And just to like double click on DeFi and why is DeFi important in the first place? Isn't centralized things more efficient? Generally, yes, that's true when things have network effects, but particularly the focus of blockchain technology is to allow everything to be censorship resistant and trustless. And where that becomes really important is if you look at our traditional financial systems, a bank gets to choose who their customers are. They can say, sorry, you can't open an account with us.
Right.
A government gets to choose what countries they sanction and place regulations on that prohibit economic activity. And things like your identity or your credit score also prohibit or enable you to get different levels of financial service. So the promise of DeFi, or the application of using blockchain technology to then take what exists in the traditional financial world and bring it here into software, is that if you remove the needs for trust or counterparties on one side, anyone can interact with software and effectively get the financial services they need, whether that's custody, whether that's like sort of the core banking of payments, whether that's receiving a loan to then use that for furthering your business or what have you. In many parts of the world, it's just not possible for different reasons. And U.S. people often say, well, I'm a first world country, it's not my problem, so I don't need to pay attention to it. Well, we actually experience a lot of that in our day-to-day, especially within the crypto industry itself. If you're not an accredited investor, but you still trade cryptocurrencies, in the US, you don't have any access to lending products like margin trading. Like you can't get a levered position on BTC if you wanted to. It used to be available, but regulators forced the exchanges to stop offering that to US customers. So for something like what we're building at Kava, we actually allow people to just interact with software, receive a loan to then do a levered trade of BTC and get exposure that they couldn't otherwise from a centralized party.
Right. Okay. So yeah, I think that's a good segue to talk a little bit more specifically about the products and services that Kava offers. So what are those products and services, and who are they for? Who is Kava for?
Kava is, so I should start off and say, like, we're not your typical ICO or crypto project, in that we didn't just take like an application outside of crypto and say, okay, we're now doing blockchain for healthcare or blockchain for gaming, even in my last market's case, right? We as a company sat down and said, okay, who is using cryptocurrencies today in bulk? And our first assumption was that it was used for payments. That turned out not to be true. Payment volumes are really small. Where people use crypto assets today is primarily with trading and speculation on exchanges. And another way you can think about it is, like, what are speculators? Well, effectively, they're just gamblers, and the exchanges are their casinos that they live in and play in. So if that's the killer use case, so to speak, of crypto today, what products do these people need? And with that lens, we looked at, okay, well, if the traders and the speculators are a core audience, what can we give them that they want to use? Well, they want to be able to win in both ups and down markets. So as BTC price goes up, if we give them better tools to benefit from that, if they place their bet accordingly, and conversely, if they believe BTC is going to go down, do they have adequate tools to meet that? And as I mentioned, with margin trading in the US and other areas, the answer was no, they didn't have all the financial products a good trader should have. So what Kava offers is a trustless way for people to access a loan and stable coins. So in the case of a up market, they can receive a loan with their BTC as collateral or crypto assets as collateral, and effectively take out a margin position by using that loan to buy more of that same asset. So similar to if I'm buying Apple stock and I use a margin account, I can, instead of just buying one Apple stock, I can buy two with the same amount of money. In this case, traders can do that with crypto assets now. And then in the case of down markets, the loans are issued in stable coins. So with every sort of marketplace or transaction, there's always two parties. And who's taking these stable coins? Well, it's the people who believe that crypto is going to go down, or they want to maintain a sort of value pegged to the US dollar. So our stablecoin provides traders with a means to exit out of their crypto positions and maintain their current level of value for some period of time before they go back into the market.
Okay. So how did you go about choosing the assets that Kava works with? I think you listed them earlier. I can't all of them, but what was the process of that like?
So we look at crypto assets with a very particular lens. Even though we're technologists, we're not like BTC maximalists or ETH maximalists, or we didn't favor one over the other from a dogmatic point of view. We just say, well, if we're building a generalized toolkit for traders, or a generalized lending platform for these traders to use, we should really be focused on, well, what do the users of something like this want, and what assets do they care about? Well, they tend to care about the things that have the biggest user base themselves and have the deepest liquidity in the world. So when we looked at BTC, that's obviously the king of users and liquidity today for crypto. So that's a no-brainer. Ethereum, we compare ourselves in terms of like the services that we're offering to an Ethereum project called MakerDAO, which is arguably like the first big mover in the DeFi space. And they actually serve Ethereum quite well. So as a small startup, we didn't think it was necessary to compete with them to get more Ethereum users onto our platform. Instead, we could address markets that MakerDAO couldn't, which are all the other assets, since they're very much just ETH focused. Our platform is generalized, so we could service Ethereum customers. We're just like actively choosing not to. But because it is an open source community project, a number of Ethereum developers could build in support for it and do that on their own, and then we would see how adoption picks up. But as a company, our focus is really building on these assets where there's users that don't have access to leverage or hedging at all. Or in technical terms, they don't have access to smart contracts because their currency or their crypto network that they're on really is just functioning as a currency. And those include Ripple, which is XRP. That's very just payments focused. There's no smart contracts really available there. So by applying our platform and our solution to it, all of a sudden all the XRP users can then receive loans or exit into a stablecoin backed by the asset that they like, which is Ripple. So we choose basically very simply how many users, what is the liquidity profile, and also like to some degree we have to look at the volatility of the assets. Whereas if price is going up 1,000% up and down, our type of system experiences more risk, and it doesn't mean that it's impossible to manage. It just means that the level of collateral a user has to contribute will need to be much higher, so the risk is appropriately managed. And in that way, like you want to give users a good user experience. So if collateral is prohibitively high, then it doesn't really serve the purpose. So we just looked at sort of the top market cap coins. They're all liquid. They're stable-ish, or the volatility is good, but it's not in like a panic sell mode or panic buy, or it's not any. It's falling within some range, so we can look at that and feel relatively safe in supporting it. And then as we expand and go forward with multiple assets, we'll be looking at things in the same way. It's like, does this new asset that do they have a community? Do they have a user base that wants these services? Do they have liquidity on markets that we can tap into to make this all work? And if so, then we can basically rank them in that order and then build out support.
Right. Okay. So what are the roles of the Kava token and the USDX stablecoin on the Kava network?
The Kava token is the staking and governance token. And what I guess that in terms of like when people listen, they're asking, is that a utility token or is it a security token? I'm like, well, things aren't always so black and white, but just to get that out there, it's a utility token for all intents and purposes. It's core to actually securing the database that underpins the whole system, the blockchain. So it's a proof of stake system, meaning that one token equals one vote. And that also comes along with it is some form of block rewards that are issued to the stakers, inflationary block rewards. And it ranges between 3 or 20%, depending on how many people are actively staking at a given point in time. But let's say for average, it's probably between 7 and 10%. But the level of staking that happens on the system is very closely tied with the level of security that we have, or sort of the mitigation of attack vectors. So it's a very core part of the system, especially since we're talking about dealing with other people's collateral and assets. And then the governance piece comes in where every person who holds the Kava token is responsible for voting on the various parameters of the network. So this is like what types of collateral can be supported, how much of USDX loans the stablecoin can be issued, what types of savings rates or interest rates should the system be charging, and pretty much anything that's a variable like that, that's a number, they're required to actively pay attention to. It's very similar to a central bank where they're constantly monitoring employment rate, interest rates, giving guidance. The governance group of Kava has to operate very similarly. They have to see is all the collateral becoming more at risk? Is its profile changing over time? Do we need to adjust the parameters of what's going on to make it more sustainable and mitigate the risk going forward? They need to operate in the same way. And then lastly, where the Kava token becomes like a core from an incentive point of view is that as a user of the platform who's getting a loan in the stablecoin USDX is interacting, when they repay that loan, they have to pay back the interest rate in Kava. So they're paying back the stablecoin as well as some additional Kava amount, and that Kava amount is effectively burned by the system. So that Kava is destroyed, reducing the total supply. So as usage of our system goes up and more people take out loans and repay them, the total Kava supply decreases.
Okay. Yeah.
So that's Kava. And then, one more thing on the Kava token. If there's ever some risky scenario in the future due to poor management by the Kava token holders, such as a freak crash in price of an asset that the system wasn't able to properly manage, then, and it becomes in sort of this under collateralized state. Like there's less collateral, less crypto locked up in the system than there are outstanding loans. Then what happens in that scenario is that more Kava tokens are minted as a reserve asset and then used to pull off the stable coins off the market until a debt to collateral ratio is maintained that's deemed in balance.
Okay, gotcha. That makes sense. So can you tell us, so the main net was launched on November 15th, is that correct?
Don't know the exact date. I think that's right.
Okay, I think it was, I have November 15th written here, but in any case, it was launched in November. So can you talk about the activity and growth that you've seen on the mainnet since the launch, and given that, what are your projections for the next year?
Sure. Let me just open up a block explorer here and see what has happened since. So in that time, there has been, it's at block height 300,000 or 330,000. So quite a few blocks have been produced in the past. I guess it's been a little bit over a month, with each one of those blocks containing many transactions. The number of validators, or like businesses that have come on and started supporting our network, running the nodes, which range from financial institutions like Delchain National, and maybe your listeners know, but Deltec International is the owner of Deltec Bank. That bank's like Tether and USDT.
Okay.
So that group is now running nodes. We have like Binance and other exchanges running nodes, as well as a number of like VCs, all sort of supporting the security of our blockchain. And currently we're at 77 validators. The voting group goes up to 100, so it's been steadily growing. When we launched, it started at 25, and it's 3 times the size now.
Okay.
And roughly, out of the 100 million tokens that were initially created, 75 million of them are actively being staked right now. And why that's important is that's sort of if our Kava token is worth, I guess it's 80 cents today, and there's 75 million of them being staked, that represents the security of the blockchain. That's what people are putting on the line to say that this is going to be secure going forward. And those aren't tokens that are like liquid in the market, but they're tokens that people are putting at risk. And if they ever want to unstake them, that's all visible on a block explorer, where they can't move for an additional 3 weeks before they actually hit that owner's account and they can be traded out. So it's a very strong signal from the project and the token holders out to the world that people aren't just sort of taking this and trading it on exchanges or selling it off. They're holding onto it and saying, I'm going to definitely hold on to this for like the weeks to come.
Yeah, okay, very exciting. So the Kava token was originally sold during an IEO on the Binance Launchpad. So can you talk a little bit about that experience, and how, whether that was, what were the advantages that presented to this project as it was launching, and are there plans to continue to collaborate with Binance?
Yeah, we got really lucky, I think, with, or at least we're in a fortunate position where, because we had been in the industry for a while, and because we had already been partners with Cosmos and a number of the other big players in the space, we had some conversations with a department of Binance called Binance X, which focuses on building out utility and the ecosystem around BNB, or the Binance Chain asset. And it was through them we got introduced to Binance Labs. And they said, oh, well, this project's really interesting. We'd like to put you in as an IEO. And that whole process was very fascinating, just because we had to redo our release schedules. So it wasn't just like everyone was liquid day one and a bunch of tokens could just dump on the market and destroy the price. It had to be done almost like an IPO would be, where you have sort of release clauses with all the investors. So we had to run around, work really hard with all of our partners, say, sorry, we know we had a contract before for some other expectation, but now to make this happen, we have to change things. But the result of that is that Kava, I think, has the most tight release schedule in terms of circulating supply of tokens out of any project ever, which is I'm very proud to say that. And what that means is anyone who participates in the IEO is protected, so to speak, from large whales or large holders of Kava tokens dumping the price on the market. Like it's actually impossible. None of them are liquid for the next 6 months, and the majority aren't. Like they vest over a 2 to 3 year period. So it's a very good signal where anyone who participates in the IEO is pretty much the only liquid tokens out in the market today. And going to your question of like, why did we choose an IEO in the first place? Well, it's not really a good fundraising activity. You do raise money, but there's so many costs associated with it, like working with market makers, making sure there's liquidity so people can trade. There's a lot of marketing costs in addition to that. And you have to provide capital to make a lot of it happen. So for all those means, what an IEO really is to a token creator is a great marketing activity. But for us, it was like a double win because our core audience are traders and speculators for the Kava platform, like who's using our services. And so where do traders live? Well, they live on the most traded altcoin, which is Binance. So it was just like a really good opportunity for us to get access to our potential users and create a lot of awareness. And it was just like particularly nice since we had announced the project in June, and then that just happened a few months later. So it definitely exceeded our expectations to have sort of one of the world's top exchanges kind of come by and stamp us with their validation and say, like, yes, we're going to bring you out to the world. So now, like today, Kava, the token, has been traded by hundreds of thousands of users, and that's just not a distribution or access to people that we could have had, otherwise if we were just like our small little team of, at that time, 6 people. So it was definitely a big growth accelerant for us.
Yeah, fantastic. So towards the beginning of this interview, you mentioned that the word DeFi kind of changes definition every year based on what's happening in the space. So I'm curious if you have any thoughts, like, as this year is drawing to a close, as we're approaching the beginning of 2020, what are the trends that you see going into this next year? What do you think that DeFi will mean in 2020?
Yeah, that's a great question that is fun to speculate on. I think what we're seeing is that people are feeling that DeFi and CeFi, like decentralized finance, everyone should be offering lending products across the board.
Yeah.
And while financial institutions are going to, people with a lot of capital will likely prefer a trusted relationship with a centralized entity that is regulated, that does have certain constraints that they just can't run away with their capital. Where like the smaller traders, I think, will lean more towards DeFi going forward, because that's where they can get access. Regulations aren't serving them for different reasons. And how I see like this year, it's been all about sort of the year of DeFi, the year of stable coins, the emergence of additional fiat on-ramps into crypto generally. I think next year is, and we're already starting to see a lot of this this past quarter, but the industry is maturing as like a financial industry. So many of the exchanges are offering derivatives products, and derivatives are now becoming kind of like the mainstay of where all the volume is and where all the activity is within crypto. So I think where DeFi is going to evolve is we're going to see much more activity, not just on the lending, which is already taking off, but also in extending that lending and extending those stablecoins into new products. So like options, futures, forwards, all sorts of new financial products that just don't exist for crypto traders today.
Right.
And then the last thing is, I think DeFi has been very, very kind of captured by the Ethereum ecosystem, or like maybe capture isn't the right word, but it's been contained within the Ethereum user base. And there's this pent-up demand between all the other asset holders, particularly those that don't really care about ETH for whatever reasons, and they want DeFi, but they just don't have a way to get it. So what we're going to see in the coming months and the coming like 2020 is that many new platforms, Cosmos being one of them, will start having all these new developers that are focused on DeFi solutions bubble up, and they won't be sort of contained within the Ethereum ecosystem. We're seeing a little bit of that with EOS. We're seeing that those initiatives on Polkadot, and pretty much any large project that is a top 20 coin today, like they see DeFi as the growth trajectory. I was just at a Ripple launch event last night, and it's all about DeFi. They want to be the open platform for money. And XRP, like a core focus for them is making sure XRP is one of the main assets used when someone's interacting with a DeFi application. So I think that's true across the board for all these large cap cryptocurrencies. So we're going to just see more and more investment from those that have already established themselves, and the developers that are new and coming into the space, they're going to start developing on things that are not just Ethereum.
Brian, thank you so much for your time. It's been absolutely fascinating to talk to you.
Yeah, thank you, Rachel. It's been fun chatting with you as well.